Nvidia just posted record-shattering earnings, hinted at $65 billion next quarter, and yet Nvidia stock still sold off. Is this the buy-the-dip moment of the AI decade, or the start of the Nvidia stock bubble bursting? Stay with me, because today we're breaking down Nvidia stock, NVDA, the earnings, the AI bubble fears, and a huge new twist with China chip exports. In this video, we're going through the latest Nvidia stock news in plain English. No Wall Street PhD required. This is not financial advice. Do your own research and never invest money you can't afford to lose. Here's what we'll cover. Nvidia's record-high Q3 earnings, why Nvidia stock dropped anyway, and new price targets and the China chip twist. Let's start with the numbers. So, Nvidia just reported results for Q3 fiscal 2026, and the numbers are insane. Total revenue, about $57 billion, up 22% from last quarter, up 62% from a year ago. Data center revenue, basically the AI server chip business, hit $51.2 billion, up 25% quarter-on-quarter, up 66% year-on-year. Earnings per share, around $1.30, up roughly 60 to 67% versus last year, depending on the measure. And Nvidia isn't slowing down. The company guided next quarter's revenue to about $65 billion, plus or minus 2%. That's higher than Wall Street was expecting. CEO Jensen Huang is basically saying, Blackwell AI chips are sold out, data center demand is off the charts, and we're in a virtuous cycle of AI. Why this matters? If you care about the AI boom, from ChatGPT-style models to cloud data centers, Nvidia is the picks and shovels play. These earnings show that AI spending is real, not just a PowerPoint slide. So why did Nvidia stock drop? Here's the twist. Nvidia stock initially spiked, then reversed hard. After earnings, the stock jumped more than 5% intraday. But by the end of the next day, Nvidia shares were down over 3%, dragging big indexes like the S&P 500 and NASDAQ lower too. Right now, Nvidia stock is trading around $179 per share after a couple of choppy sessions. So what's going on? According to Reuters and other outlets, investors are wrestling with two things at once: AI bubble fears. Some strategists say AI stocks, including Nvidia, have run too far too fast. Nvidia's valuation is rich, and people are asking if all this AI spending will actually deliver returns. Macro worries, higher for longer interest rates, big swings in tech, and concerns about how concentrated the market is in a few mega-cap names. In short, the business is crushing it. The stock? It's on a roller coaster. For traders and long-term investors, that means Nvidia stock is now a volatility story as much as a growth story. Let's talk new price targets and the China chip twist. Despite the pullback, Wall Street is still extremely bullish on Nvidia stock, and around 40 to 50 analysts cover NVDA, with the consensus rating being a strong buy. Average 12-month price targets cluster around $240 to $260 per share, implying roughly 35 to 45% upside from the current price. Big firms like Citigroup, Barclays, JP Morgan, Jefferies, and Oppenheimer have all raised their Nvidia stock price targets into the $250 to $275 range. One major bank, Evercore ISI, even set a street-high target around $352, betting on accelerating revenue from Nvidia's AI chips. At the same time, there's a geopolitical wildcard. The US government is considering allowing Nvidia to sell its H200 AI chips to China, after previously blocking advanced GPU sales. The Commerce Department is reviewing a policy change. Nothing's guaranteed, but it could open a huge market if approved. Why this matters for Nvidia stock? If exports are loosened, Nvidia could see even more demand for its high-end AI chips, bullish for future revenue. If policy stays tight or flips again, it reinforces geopolitical risk around Nvidia's China exposure. Put simply, Nvidia's future now depends on two power centers: Wall Street's view on valuation and Washington's view on export controls. If you found this Nvidia stock update helpful, hit like, smash subscribe, and ring that notification bell so you don't miss the next breakdown.
You like the color of money? Follow Synth Wealth Finance and lock in.